I mean, if you're a traditional automaker, you must be so scared right now. I mean, you're trying to save your core business in the pandemic, and on top of that, you're trying to build an electric autonomous vehicle, and really, none of them have successfully done that.
Hello everyone and welcome to Finding the Trend. I'm here with Mike and myself, David, and we're going to talk about Tesla stock. Mike, what's going on? Tesla stock's been crazy. Battery day announcement was great, right? The talks was fantastic, future looking everything, but the stock went down and it kept going down the next day too. And then it went up? Like, what's the deal? Like, I can't find a trend. How are we finding a trend if I can't find a trend? Help me out here, Mike.
Yeah, the general finance media had a really poor coverage of the event.
Tesla's battery technology is, 4 years ahead of the competitors? Are you now saying if, and I'm putting a big emphasis on if, they can achieve this, then that lead would be insurmountable?
I think that's exactly what this means. And the cheaper car, is also another point in that bucket, right? Because now if you want to match Tesla on price and performance, how are you going to do that? Their cars are getting even cheaper. They're breaking into other customer segments. So really, I think their market share should be a lot greater coming out of this announcement. Their future market share should be greater coming out of this announcement too. Because of that cheaper model.
Great points brought up there. One, Tesla is just running away from the competition. There's no way of catching them at this point. You know, there are talks of Volkswagen potentially being number two. Like even Volkswagen CEO was interviewed a couple months ago and said they may be number two. Wow. No one else is even close. Obviously, this just extends Tesla's lead even further to just where you're forced to either license their technology or you just cannot compete.
Yep.
And even more crazy, like at the end there, they were going to go into the $25,000 electric car that Tesla promised in 3 years. Mm-hmm. This is obviously because they can reduce the cost of the batteries by half, mm-hmm. which obviously would significantly improve margins while also making the car a lot cheaper to produce. The electric car is on the declining cost curve, while if the gas cars continue to decline, you know, they're actually on an increasing cost curve, if anything. So they're really doing quite well because they're on the right side of things. Ars Technica just recently did a article, Tesla plans to make batteries this cheap. And then there's several different things. There's vertical integration, making sure there's a range increase for the amount of batteries you have, the kilowatt per hours reduction, and also a capital expenditure reduction as well as they don't really specify this here, but also the performance of the batteries goes up as well. So this is really kind of a game changer. Tesla's just going to absolutely take over. They also go over a little bit of structural batteries, which is another really out of the box thinking that Tesla does with their designs that no one else really thinks of to do this, but you can make the batteries be part of the structure, and they found that it actually makes it stiffer and safer as well, which is something that no other automaker would have the expertise to do because they haven't been in the game for manufacturing EVs as long as Tesla.
Yeah, plus you need all the machinery to make it and engineers to design it, right? You have to have full control of the battery because unless you're making the battery yourself, you can't really design the structure as part of the battery. Otherwise, your manufacturer might change the design of the battery on you. Here, you have full control, so they're the only ones that are actually capable of doing it.
The other thing is that we aren't even considering Tesla Energy and how the effects of these batteries will have on Tesla Energy. Imagine a power pack, you know, it's currently like $7,000. Imagine that dropping by half. You know, obviously that is very compelling by a cost metric. You know, I think if it were worth $3,500, if it were $3,500 to buy a power pack for your home, I think I'd do it. I'd totally do it. You know, especially given the blackouts and grid reliability.
Mm-hmm. Because people are saying Tesla's going to have this amazing news and they're going to do all this amazing 1,000-mile battery or whatever, right? And then when it's not announced, then they kind of like, oh, it's all priced in, we're selling out. So I think that's what causes the volatility, in my opinion. But, you know, it sounds like long term, that's a stable company that's going to grow. And like you said, over the long term, it's been growing up steadily, actually exponentially. But yeah, short term, it's pretty volatile stock because of people that aren't experienced in this type of growth company.
Well, it's actually the mainstream finance media. If I were to kind of hallucinate a little bit,
Sure.
I would guess it's because they want the stock to be lower so that they can get in at a good entry price.
That's a good theory.
Anyway, Jim Cramer also comments a little bit on this, and
the fact that
let's hear a little bit about what he says.
Could improve volume and margins. Others are saying that even though that's a long-term story, near-term, there's not many catalysts to drive the stock.
Well, look, I think that you've got this process by which the stock is up really big ahead of Battery Day, and then he delivers what? I mean, Phil LeBeau sent me some terrific stuff. He delivered targeting 56% drop in the cost of battery cells. That matters tremendously. But we were talking about the 1 million mile battery. What a setup that almost nobody could possibly deliver. And the 20 million vehicles.
20 million vehicles it's like 50 times.
Are they doing like
Right.
2,000 a week? Is that what the deliveries are?
Well, it's 20 million a year. So how many are they producing right now? Their target this year is predicted to be 400 to 500,000 cars a year. So to go from there to 20 million is 50 times that number.
Okay, that's really dreaming and shooting for the moon there. So
Yeah.
expectations were just blown out of proportions. They think Elon is like the next Iron Man, which is pretty close to it, but he still can't do miracles that much.
That is the narrative that the mainstream finance media is portraying. You know that, and Jim is disagreeing with these people. You know, and saying that no, actually, you know, he's delivering some really blowout numbers, and you know this should be taken seriously. And these automakers should be really scared. If we go into Gavin Newsom's mandating the full transition to electric cars by 2035, it's even more apparent, you know, why automakers will be honestly completely dead. All traditional automakers will be completely dead if they don't go build EVs.
And even if they do go EV, they're going to still be behind because Tesla has a huge head start and pretty much the monopoly over all this technology for now.
Right. It has a huge, you know, knock-on effect for Tesla's stock price, obviously, as we saw that Tesla bounced up yesterday on this news.
Yeah.
Because people realize that, rightly so, because like electric cars are going to be 100% of the market.
Yep. At least in California.
There is no competition coming.
Yep. Well, I mean, there is competition, but the competition is far from being competitive, right? It's like comparing a Nissan Leaf
really questionable
with a Model S.
It's really questionable at this stage. I mean, considering like Volkswagen, and maybe we'll get into this in a later episode, but it's really questionable whether they can even catch up because, for example, Volkswagen has had many issues with their next generation electric cars, not even talking about their current generation electric cars. If we forecast the Tesla revenue across with the battery growth, well, someone did the numbers. Let's crunch down the numbers here. So assuming a 50% annual growth, that's what they target for.
Wow. That's nuts.
To 3 terawatts, right? So to put that in context, currently they aim to reach 100 gigawatts in 2022. You know, so 3 terawatts by 2030. So 50% annual growth. If you did that with the revenue, and I presume why it shouldn't like follow that cost curve, because honestly, if you're selling that many batteries, you probably would have that kind of revenue growth. You know, you easily get to 1.2 trillion here.
That's nuts. It's a literal exponential growth curve. That's just crazy.
So this is understandably why the finance media does not get Tesla, because they're used to, you know, 10% growth, 15% growth at most, not 50% growth. This is an exponential growth curve.
Yep.
They're used to thinking in terms of linearly, and they're wildly off the mark.
Yeah, absolutely. And this is the only company in the whole stock market that's doing this, right? This kind of growth. I mean,
Right.
maybe Amazon back in the day, if you can compare it to that, but this is another level, I believe.
Right. I'm going to call it now. This is an Amazon moment. Get in before or it's too late.
There you go. Mike's calling it. This is September 25th, 2020. Mike says, get it now. This is going to be the Amazon of the future. So let's see where we are in 2030, if Mike is right.
One last tidbit.
Yes.
Elon.
Shanghai factory continue to scale quite a bit from where it is right now. I think we really could expect that to be, over time, a factory that produces over 1 million vehicles a year. Yeah, it's cool. So let's see. So we also reached in the past year volume production of the Model Y, and this was the smoothest launch that we've ever had. So I think we're definitely getting better at new vehicle launches and building factories and scaling production.
He mentioned that the Model Y was the smoothest launch ever.
Yeah.
And really that sort of is this calls to the similarity or like parallels to the launch of the Model 3, where, you know, if they're doing this well for having, you know, a single model that outsells their rest of their entire lineup, and it's the smoothest launch ever, man, they must be killing it.
Oh yeah, and they're learning and they're getting better at everything. So it's only the beginning, and you can see their progress right away.
And it's kind of interesting. I think in that sense, Elon was throwing investors just like a hint, just like maybe a tea leaves for people who are willing to read the tea leaves, that like this quarter will be a blowout quarter because of Model Y.
Oh yeah, that makes a lot of sense. If you were predicting the growth of each of those models, now you have one model, pretty much double the growth, right? Because one model exceeds the growth of every other model. So yeah,
right.
Probably. That's crazy. That's a good
right.
read. I would have missed that if you didn't point that out.
Cool. Yeah, that's all I have right now.
Wow, that was a lot of good stuff. Thank you, Mike, for kind of catching me up and catching everyone up on all the information, because it's a great presentation. All these facts are good. All these headlines are good. Everything is good. The company's on a strong trajectory towards the future. It should not have taken a decline, but it looks like short term, it was volatile because people had crazy expectations, and then the expectations weren't met because they were crazy. So it went down, and then news headlines again confirming that electric vehicle is the future, bringing the stock back up. So we're still good long term. So Mike, thank you again for helping us find a trend on Tesla stocks. And thank you everyone for tuning in. Yeah, like our video. If you like this content, let us know if you want to see more of this or what other content you'd like to see. Make sure you subscribe if you're not. And thank you for watching. Stay healthy, stay safe, and we'll see you guys next time. Bye, everybody.